So can you see how I'm using the overall swings? I have a really clear level between, I'll just do it this way. I have a really clear level make this a different color. Between those low volume areas right there. If price starts getting above 37.75, likely going to go test 44.75, especially if 37.75 proves to be an unfair low. We get a bounce off of this 37.75, 38 area. This is likely going to be tested. Once price gets back into this area, if it does, the most likely place for it eventually to go, doesn't mean it will, is back up to VPOC. But as long as it's staying underneath this level, then my swings are here. Just hit F2 here. Here are my swings for the current market. Let go. And now this. And our potential is back down to this 3.25. And if 3.25 breaks, whoo, possibly down to 225, but man, the next largest low volume area is back down at 1894.50. So this 06 level is going to start to become pretty important. So all of this adds to the context. And like we said earlier in the day, this goes to your if-then, and this is your developing if-then. If buyers are not willing to take price through this high volume area, and price comes back down to this level, then this becomes at risk. And if this loses, then we're likely to see price possibly even come lower. And we will have started, not saying that the market, doom and gloom and everything's going to end, but we will have started a channel like that. And this starts to become our context. So we'd look for a swing low, right? We want to see what happens back down at this 0350, 0325, where that buyer really stepped in hard. And that was pre-market, so that might actually occur at 06, 05 today. We'll see. But we want to see if they hold. If they don't, you can fully expect a move lower, possibly down to 84.50. That 87.25 is a good level too, which would be right down to this level. Is it reasonable to assume we're headed now to 1725? I would tell you that it's more reasonable to expect a test of this 05, 06, 05 level. And if that breaks, then more than likely a test of that 0325. And we'll see if those buyers step in again. How has defining your prices of interest prior to the open helped you stay out of spontaneous trades? Not just the levels, but the if-then scenarios. And I will tell you, it's taken some discipline still. But the more that I follow this, more that I put my levels on this chart and let the print help drive me, the easier it is for me to stay out of trades and spontaneous trades. Are swings more relevant than days, meaning a swing analysis more relevant than a day's analysis? Great question, John. Great question. Not necessarily more relevant. They need to work together. If you see something in the day, for example, let's say we do swing low down to this level and we swing high. These are just trends. You don't necessarily trade off of these trends. Let's say it does move down here and price starts moving back up and it moves up and intersects this low volume area and this trend line and price breaks above it in the day. Then the swings become very important relative to context, but that day and how it might end, let's say it closes above, becomes very important for your trade the next day and your trade setup in the next day. We are at long-term unfair lows. We are at long-term unfair lows, 1906, which is very close to yesterday's close, which is where I would expect to see some level of bounce. And we can watch this. If this bounces just a little bit and price hammers right back down into it, maybe back up to 675.7, which was the previous low volume area, and we start getting strength back down at the bid, this could really go. But this was, I talked about this earlier, this was the level between 5 and 6 today, the low volume area, the composite low volume area. So this would be where we would look for a long. And we'd go to our handy dandy volume profile chart. We'd say we've got to be careful of this level, 07.25. If it gets up through there, we very well may see 1909. So we'd look to scale maybe here out in front of it at 850. Letting the print then define where you're going to scale. Okay, strength, weakness. Potentially, here's your first scale. Right here. You want to protect some profit. See the strength coming back in at the bid. There's still strength at the offer at 750. If it breaks above this, may see that 09 level again. But this is the long-term low volume area right here. I believe I called that out early. The 05 to 06. It was 675 yesterday, but with the morning activity, because the volume was so thin long term, it dropped it down to 06 is the low volume area. What's really cool for me is that being able to look out ahead, even as this moves down, knowing that a rejection off of 24 and then below 17 was likely to lead this lower, and we talked about that, was likely to lead this lower, and that this 06 level had the potential to be a good long. If buyers were going to step in, this is where they would step in. And if this gets broken, then our next area would be where those buyers stepped in the other day at 3.25. So we need to all information adds to context. Yes, trading is not easy. It's not. Again, the only difference between those that succeed and those that don't succeed is that those who succeed are willing to do the things that those who don't are not willing to do. and that is to do the homework, gain the context. If your job is to trade, buy with buyers and sell with sellers, then you better have a pretty good idea of what they're most likely to do. They can do anything at any given time, but what are they most likely to do? When you have that and you have context, you have control over the one thing you only have control of, and that's your risk. So we've gone a long time today. Tomorrow we have no presentation. Tomorrow we're just going to be in the charts all day. So in my trade plan, I'm building these scenarios based on the information that I've collected. Here's my commentary. I've picked out a couple levels in the commentary. They line up with this. Those are levels that I'm looking to trade with now. Trading, trade psychology. I'm going to go through this real quick. This is a huge, wide open topic. Everyone has an opinion on this. Lots of books, courses, seminar, etc. It's a very complicated issue. It's personal. It's very complicated. Well, actually, I would tell you no. In fact, it's not. Relatively, trade psychology is a very simple concept. How can I say this? Let me ask one question to you. If every time you placed a trade, you knew that that trade was going to win, would you have any psychological issues at all? If you knew absolutely that every single one of your trades was going to win, right? Of course not. Right? You wouldn't. If every time you placed a trade and you knew that your trade was going to lose, would you have any psychological issues? No, because you knew you were going to lose. You wouldn't even trade. Why would you ever even trade if you knew you were going to lose? You wouldn't trade. Therefore, you wouldn't have any psychological issues. So there you have it. Every neurosis, fear, anxious moment, psychological issue comes from one thing: your perpetual inability to know the outcome of a trade. It's the uncertainty. It's normal. It's human. And it's hurting your trading. You must accept the fact that you will never know and let it go. The very best that you can do is do your homework, get context, create a plan, watch the auction as it develops, execute and be an effective risk manager with the only information that you know, which is the print. It's the only thing that you know. You have so many internal and external influences on you. Prior to a trade are all these external influences. What if, what if, what if? Your trade setup, you start shifting from external to internal influences. Trade on, you're dead into internal influences. Is this going to work? Is this going to work? Come on, come on, come on, come on. Please, God, please, God, please, God. And post-trade, you know, maybe you're toweling off. You sweated so much through the trade. You go back to external influences. Oh, let me go check this. Let me go check that. The external influences, which are the market, should help drive you all the way through your trade. It's the only thing that you know. The market created this thing called the FUD, fear, uncertainty, and doubt. Uncertainty being the most significant of all of these. Uncertainty creates and drives fear and doubt. So let's take a look at this a little bit different way relative to fear, uncertainty, and doubt. At the beginning of a trade, you don't have any fear, you just have doubt. I doubt, I doubt, I doubt. When you start looking at getting into a trade, not only do you have doubt, but you have fear. Fear if the trade loses. Once you get into the trade, a lot of fear. And then once you get out, doubt. The one thing that stays the same through every aspect of trading is uncertainty. The market is and always will be an ambiguous, uncertain environment. Those that have a difficulty in ambiguous environments will have difficulty being successful at trading. Ambiguity and uncertainty creates emotion, fear, and doubt, and emotion does two things. It limits your ability to interpret data and act objectively, and it gives power to your fears and doubt, which increases subjectivity. Everything that makes you interpret the market subjectively will make you lose money, miss opportunities, be defensive, be less likely to learn, revenge trade, create more or gives more strength to your negative beliefs. Everything that helps you read the market and act objectively will allow you to be successful at managing your risk reward, have more patience in waiting for trades and targets, let winners run, act objectively, and stop losers early, and actually grow your trading business. It's the uncertainty in the market that messes with you as you trade. It's the one thing that will keep you from looking at this thing, at this, and this, and interpreting and reacting the data that the market is showing you. You have to accept the fact that you're never going to know what's going to happen next. And the only thing that you can control is your risk and put yourself in a position where you can control that risk better. That means finding good trade entries, which means understanding context and understanding where buyers likely to come in, where are they likely to defend, and where are they most likely to take price. Perfect example. Once they got through that, most likely place for them to take price was 06. This is the first place we'd expect to see buyers, 06. If we start getting strength again down at the bid at 05, 75, 06, 0550, you can start looking down here and possibly lower. So day 4 homework is relatively easy. It's not a long list. It's taking this sheet and completing it for tomorrow. Pop in the numbers, these numbers, write your commentary and some scenarios, and in the morning we're going to talk through the scenarios. And DB, well, I was going to say maybe we could start a little earlier, but that's that's the homework for the night. The Excel template will be available for download, absolutely. Yeah, they can use the same. They can use that one I gave you yesterday. Yeah. I changed a few columns, but it's not going to impact anything. So that's the homework. I want you to come tomorrow with a sense of context of the market. What did the market do? What is the market trying to do overall? How successful is it in doing it? One of the things I would tell you, here's one of the things I'll be looking at. Right here. This 06 level is not an insignificant level. Right down here. 06, 07 level. If we close below this tonight, then that certainly gives me an understanding of the overall effectiveness of our buyers and sellers right now. If this winds up being our low, this 525, 550, and we close back up towards 1475, then this gives me context relative to the buyer sentiment down here. And I truly will start to expect to see, we'll have a little bit of a higher low. I'll start to expect to see this be our swing low for the day, and if this is, or for this swing, and if this is our swing low, then I'm going to expect to see the swing high at least here tomorrow, if not higher. I'm not going to create a bias. I'm still going to use these levels as key levels. But if the market can't penetrate lower and close, make some additional room to the downside, then this gives me a second instance where buyers have said, not going any lower. We see value higher. We're committing to this level. So we've been 3.5 hours today. I wanted to make sure I went through the information you needed to collect to do the homework, how to gain the context, and then once you have that context, how to start identifying levels as your if-then statements. So as I look at the volume profile today, let's just say, now it's going lower. Thought it might, but I don't know what the profile is going to wind up looking like today. Watch this level down here at 3/4, 350 though. Let's just say it bounces down there. We get responsive buying off of that level. And this is what our profile looks for the day. Then I will, sorry, I'm thinking about something. Then I'm going to look at these levels and say, here's where in this distribution right here, this is the highest volume area. This is still a valid short for me. If we open up below 17, I'm going to look for a short in this area. If it pops above it and comes back down and tests it, I'm going to look for a long. Simple as that. This is a key level. If we open up below, say this 03 level, if we open up below tomorrow down here, I'm going to look for this 06, 07 level, and I'm going to look for a short back down towards 94.25 to 95, 96 level, 1896. So I'm going to take this, I'm going to say, if we open up in this range, this is what I'm going to do. If we open up in this range, this is what I'm going to do. If we open up lower, this is what I'm going to do based on this information. And then tomorrow morning, we're going to come and update that based on the overnight session. And I was just thinking, DB, could we set up a time for Sunday evening to do a pre-market, not pre-market, but a trade planning session for Monday? Okay, so let's you and I kind of agree on a time, and what we'll do is have the room open for Sunday night, and we'll go through the context of the week. We'll look at the big picture, what the market's trying to do, how good of a job it's doing, how well it finished on Friday. Did we see any responsive buying on Friday? Continued acceptance lower. What did we see on Friday that would start to lend to a trade plan for Monday morning? Okay. I hope people can make that. So DB will, I think, just pick a time. How about say I don't want to get into anybody's dinner time. I don't know. Sunday night. I'd like to do it after the market reopens.
Okay, I'm just going to suggest that we talk about this after the session, and then we'll be sending out an email that tells you when videos are uploaded and all that kind of stuff. So I'll make sure and put it in there.
Okay. And by the way, we got a little bit of a low volume area right here coming up at 475. I'd watch 475.5 level. If it gets through that, it may start creeping back up now towards 1909, but watch that level. All right, then. We've been going a long time. This is the homework for today. The first thing we do tomorrow is we actually go through the homework and the trade plan. So I want to have the trade plan done and set so that we can actually do the open tomorrow and start trading and taking trades tomorrow morning at the open. Okay? Thanks again for hanging
Very
with
good.
me today.
Another excellent class. I
Thank
think
you.
everybody really enjoyed it. We had a couple of people ask where things are, so I'm going to share my screen real quick, give you some navigation before we close out for the day.
Okay, and I got to run, so I'll take off and I will talk with you a little bit later.
Sounds good. Thanks again, Mark.
Okay, thank you.
Okay, this is the client portal. And just so you guys know where everything is located, if you go up to the top, courses, you'll see the volume profile analysis listed there. Course homepage and room, same place where you log in the morning. All of the homework and Mark's templates and the test and things like that are located right here, as well as up above that, the recordings. So we've had a lot of difficulty getting this stuff up in a timely manner, and I apologize for that, but the first day, the quality of the video was just terrible, and so we had to kind of re-render everything and go through it. So anyway, I'll make sure that, actually, Mark said to just go ahead and use the one that's already here. So this is the template he was talking about. So you can just click right on that and open it up, assuming that you have Excel. Okay, I want to say thank you to everybody. Just a quick note, our web admin accidentally sent out an email just a few minutes ago that supposedly had a survey, but the link is broken. The survey hasn't even been built yet. I want Mark to be able to ask you guys what questions he wants to ask you. So I apologize for the random odd email going out. You'll probably realize that there's something in there, but we'll make sure that Mark's survey goes out when we send the email later about 1, Sunday night, and 2, when today's videos are available to you. I hope everybody had a great day, and I hope everybody's enjoying this as much as I am. We'll look forward to seeing you tomorrow. Thanks.